This question tests students' understanding of the classification of cash flows in the statement of cash flows. The statement classifies cash movements into three categories: operating activities, cash flows related to the company's principal revenue-generating operations; investing activities, cash flows related to the acquisition and disposal of long-term assets and investments; financing activities, cash flows related to obtaining or repaying capital from shareholders and creditors. The key phrase is dividends paid to company shareholders. Students should recognize that paying dividends represents a distribution of profits to owners, rather than an operating expense or an investment transaction. Under IFRS and US GAAP, dividends paid are commonly presented as financing cash outflows because they represent a return of capital to shareholders. A. Operating cash inflows. Incorrect. Operating cash inflows arise from the company's normal business activities, such as cash received from customers. Dividend payments are not operating inflows. B. Operating cash outflows. Incorrect. Although dividends involve cash leaving the company, they are not operating expenses and therefore are not classified as operating cash outflows under standard financial reporting. C. Cash flows from investing activities. Incorrect. Investing activities involve purchasing or selling long-term assets and investments. Paying dividends does not involve investment decisions. D. Cash flows from financing activities. Correct. Dividends paid are financing cash outflows because they represent a distribution of earnings to shareholders and affect the company's financing structure by reducing retained earnings and cash. Correct answer: D. Cash flows from financing activities. Exam tip: remember the three sections of the statement of cash flows: operating activities, day-to-day business operations, customers, suppliers, employees; investing activities, purchase or sale of long-term assets and investments; financing activities, borrowing, repaying debt, issuing shares, and paying dividends to shareholders. A useful memory aid is: owners and lenders belong to financing. Therefore, cash dividends paid to shareholders are classified as financing cash outflows. This question tests students' knowledge of the basic structure of the statement of cash flows. The statement classifies all cash receipts and cash payments into three standard categories established by accounting standards: operating activities, cash flows from the company's principal business operations; investing activities, cash flows related to acquiring and disposing of long-term assets and investments; financing activities, cash flows related to raising and repaying capital from shareholders and lenders. The keyword, except, indicates that students must identify the option that is not an official classification on the statement of cash flows. A common exam trap is to include a term that sounds reasonable but does not exist as a separate cash flow category. A. Operating activities. Incorrect. Operating activities are one of the three major sections of the statement of cash flows. They include cash received from customers and cash paid to suppliers, employees, and others related to normal operations. B. Equity activities. Correct. There is no classification called equity activities in the statement of cash flows. Transactions involving equity, such as issuing shares or paying dividends, are reported under financing activities, not in a separate equity section. C. Investing activities. Incorrect. Investing activities are an official classification and include purchases and sales of property, equipment, and long-term investments. D. Financing activities. Incorrect. Financing activities are also an official classification and include issuing shares, borrowing funds, repaying debt, and paying dividends to shareholders. Correct answer: B. Equity activities. Exam tip: the statement of cash flows always contains three, and only three, classifications: Operating activities. O. Investing activities. I. Financing activities. F. A useful memory aid is OIF. O equals operating the business. I equals investing in long-term assets. F equals financing from owners and creditors. There is no separate equity activities section, making B the correct answer. This question tests students' understanding of how transactions involving fixed assets are classified in the statement of cash flows. The key phrase is purchase of fixed assets. Fixed assets, also called property, plant, and equipment (PPE), are long-term assets used in business operations. When a company purchases these assets using cash, the transaction represents an investment in productive capacity and is therefore reported in the investing activities section of the cash flow statement. Students should also pay attention to the wording. The question simply states purchase of fixed assets and does not mention issuing shares, borrowing money, or acquiring assets through a non-cash transaction. Therefore, the normal assumption is that the purchase is made with cash, making it an investing cash outflow. A. Operating activity. Incorrect. Operating activities include cash flows from the company's principal revenue-generating operations, such as cash received from customers and cash paid to suppliers and employees. Purchasing fixed assets is not an operating activity. B. Investing activity. Correct. The acquisition of fixed assets using cash is a cash outflow from investing activities because it involves purchasing long-term productive assets that will benefit future periods. C. Financing activity. Incorrect. Financing activities relate to obtaining or repaying capital, such as issuing shares, borrowing funds, repaying loans, or paying dividends. Buying equipment does not fall into this category. D. Non-cash investing and financing activity. Incorrect. This classification applies only when no cash is involved, for example, acquiring equipment by issuing shares or signing a finance lease. The question simply refers to a purchase, implying a cash transaction. Correct answer. B. Investing activity. Exam tip. Remember the classification rule. Operating activities, day-to-day business operations. Investing activities, purchase or sale of long-term assets, land, buildings, equipment, investments. Financing activities, borrowing, repaying debt, issuing shares, and paying dividends. A useful memory aid is buy or sell long-term assets equals investing activities. Therefore, the purchase of fixed assets is reported as an investing cash outflow. This question tests students' knowledge of the format and presentation order of the statement of cash flows prepared using the indirect method. The key phrase is listed in which order. Regardless of whether the direct method or indirect method is used, the statement of cash flows is divided into three major sections, and these sections are presented in a standard sequence under accounting standards. Students should remember that the indirect method affects only the presentation of operating activities, where net income is reconciled to net cash provided by operating activities. The order of the three sections does not change between the direct and indirect methods. Therefore, the question is testing students' understanding of the statement structure rather than the calculation of cash flows. A. Financing, investing, operating. Incorrect. This reverses the standard presentation order. Financing activities are presented last, not first. B. Investing, financing, operating. Incorrect. This sequence is also incorrect because operating activities should always appear first in the statement. C. Operating, financing, investing. Incorrect. Although operating activities correctly appear first, investing activities should precede financing activities, making this order incorrect. D. Operating, investing, financing. Correct. The standard presentation of the statement of cash flows is operating activities, investing activities, financing activities. This order is required whether the operating section is prepared using the direct method or the indirect method. Correct answer: D. Operating, investing, financing. Exam tip: always remember the standard order of the statement of cash flows. Operating activities, O. Cash generated from normal business operations. Investing activities, I. Cash used to buy or sell long-term assets and investments. Financing activities, F. Cash obtained from or returned to shareholders and creditors. A simple memory aid is OIF. Operating, investing, financing. The indirect method changes only how operating cash flow is calculated, not the order of the sections.